My name is John Vento. I'm a certified public accountant. Also have an MBA in taxation. I'm also a certified financial planner. This past April, I wrote this book. It's called Financial Independence: Getting to Point X. With a good, solid 30 years of experience, working with literally hundreds, if not thousands of individuals, my goal has always been to help them achieve their financial goals and dreams. The 10 wealth management issues is what I cover in this book. Again, in working with literally thousands of people over the years and helping them achieve their financial goals and dreams, I identified these 10 areas as being the critical areas. We're going to start out by talking about committing to living within your means. And what does that exactly mean? Quite simply, living within your means tells us that we need to spend less money than we make. One of the biggest mistakes people make is that they live way beyond their means. Typically, when someone's living on $50,000 a year and that $50,000 is coming in, somehow they manage to spend $55,000. And when they do that, they typically end up going into debt. That's where most people end up in trouble, with a lot of credit card debt. The only reason people ultimately have credit card debt is because they spent more money than they had available to spend in the first place. Nobody gets excited about talking about taxes. And quite frankly, that's part of what the problem is about. Most people don't realize how important taxes are when it comes to our finances. What do you think the biggest opportunity is for you to save money? It's by chipping away at your number one expense, taxes. When you take a look at my book, Financial Independence: Getting to Point X, the cover will show you is basically designed as a treasure map. And at the end of that treasure map, there's an X. That X is Point X, financial independence. What's the first thing you need to know before you could get to a destination? What's the number one thing you need to know first? Not only where you want to go, but also where are you today? Where are you now? Do each of you know exactly where you stand today financially? If I asked you, what is your financial net worth, would you be able to answer that easily, or are you not sure? It's really the starting point of getting to where you want to be. It's preparing a statement of net worth for yourself. And what's involved with that is you list out every asset you own. An asset is something of value that you own. For example, the money in your bank account, your retirement account, your IRA or 401k plan, your home. These are all assets, things of value that you own. Then you have liabilities. Liabilities are simply things that you owe money for. So things like your credit card, your student loans, your mortgage, those are all liabilities. So how do we determine our financial net worth? We take all of our assets minus our liabilities, and that determines what our net worth is. The next chapter in the book deals with managing debt. Is all debt bad debt? And the answer to that clearly is no. There's good debt and bad debt. And what is really the difference? Well, when you borrow money for the purpose of making money, that generally would be categorized as good debt. So if I could borrow money at 3, 4, 5, or 6%, but I have a reasonably good chance that I'm going to make 10% or more on my money, then that might be a good investment choice. By far, the worst type of bad debt is credit card debt. So many people get into this vicious cycle of spending more money than they make. When you get into debt with credit cards and you owe, say, whatever, $10,000, $20,000, whatever the number may be, if you're paying 10%, 12%, I've heard people paying as much as 20%, that's a disaster waiting to happen. You know, trying to get yourself out of that mess is a very, very difficult thing. In chapter 11 of my book, we talk about the time value of money. When it comes to debt, when you borrow money at that type of rate, the time value of money actually kills you. It could kill you financially because with compounding, you'll never get yourself out of that hole. The next chapter deals with ensuring your health and your life. This chapter we focus on things like health insurance, life insurance, long-term disability. These are all health-related insurances that are critically important to all of us. Very often I'll meet with a client, and what they tell me is when I sit down with them, I'm going through their expenses, and I say, how much did you pay for medical insurance this year? And it's amazing to me how often I get the answer, I don't have health insurance. And then I say, why do you not have health insurance? And they say, I can't afford it. But also, as I'm going through their expenses, I noticed that they're paying $699 a month for a BMW lease. So I think there's something wrong there. And what that comes down to is understanding the difference between what your needs are and what your wants are. He really needs health insurance, right? We all do. But he wants a BMW more, I guess, than he wanted the health insurance. The next chapter we're going to cover is protecting your property. And this is also another form of insurance. And what we're referring to here is things like auto insurance, car insurance, and personal liability insurance. Now, most of us know what auto insurance and homeowners insurance is, and most of us have that. But too many people go without a personal liability policy. Typically, it'll cost you about $250 per year. So being prepared and protecting your assets that you've worked your whole life for, critically important to maintaining your financial independence. Paying for college, I think, is a topic that all of us are very used to. So there are a number of savings plans available to you out there. One is a 529 plan, which is a college savings plan. 529 plans allow you to put money into a plan for your future education for either you or your children. Any money you earn within the 529 plan is fully tax-free. Now, the question I very often get from all self-employed individuals is, what is the very best retirement plan to set up? And the truth of the matter is, there is no one best plan, because if there was really one best plan, then all the other plans wouldn't exist. So it's not a matter of what is the best plan, but the question really is, what's the best plan for you in your particular facts and circumstances? The next chapter is managing your investments. Right now, there's a lot of non-believers out there in the stock market, and there's a good reason why people have become non-believers, because if you invested $100,000 10 years ago in the stock market and kept it there, chances are 10 years later, you'd just be about where you started. That's not very impressive. That made a lot of people not believe in the stock market anymore. But the truth of the matter is, most people didn't even do that. What most people did is that they had money invested, they believed in the market. When things crashed, they got out, right? What did they do? They sold low, and for a lot of people, they still have not gotten back into the market, even though most of those losses would now have been recovered. So having a trusted advisor that will help you through that process and guide you is really critically important to this whole process of investing. Somebody that would coach you as to what to do, what not to do, maybe to stop you from panicking when everybody else is panicking. Okay, the next chapter we're going to cover is preserving your estate. Preserving your estate has to do with estate taxes. Now, we all know that throughout our lifetime, the government literally taxes us to death with income tax, sales tax, payroll taxes, real estate taxes. We pay taxes throughout a lifetime. And they literally tax us to death, because then when you die, they tax you all over again. Not on what your income is, but on how much assets you eventually accumulated. I know it sounds crazy, but they tax you all over again. Let's assume you followed all the rules in my book and have achieved financial independence. Now, upon your passing, the government will impose an estate tax based on the value of all your assets. And the last subject we're going to talk about is finding a trusted advisor. CPAs have what's called a fiduciary responsibility to their clients, which means they have to put your best interest first before they put their own best interest on the table. Also, you want to work with somebody that has an MBA, especially in taxation. We already know taxes is our #1 expense. So working with somebody who's an expert at taxes could go a long way in minimizing your biggest expenditure. Lastly, you want to work with a certified financial planner. They're not permitted to sell you or provide you with a product or service unless it's truly the right product or service for you. A lot of people call themselves financial planners as well, but they're really insurance salesmen trying to sell you some insurance policy, not really looking at your overall financial picture, as I do with the book, Financial Independence. In bookstores at Barnes & Noble and so on, but you could also pick it up online, Amazon.com, BarnesandNoble.com. In the book, I cover all 10 of the wealth management issues. A critical read, I think it is, especially in the section at the end of each chapter, Tax Facts and Strategies. Thank you very much.